and welcome to Pro Trader Strategies Market Commentary for Friday, August the 21st. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I'm going a little bit further for you guys and talk about some guidelines that I have on implementing options around those assumptions that we have for our market analysis. Anyway, without further ado, let's get on with the economic data, see how that's impacting the overall markets with some market analysis as well, and then we'll talk about some option strategies or some option trades that I've been doing. All right, across the pond, we finally got some economic data there. A lot of people were calling this not very good economic data, actually, according to what was expected. But the fact of the matter is it's still coming in pretty decent, showing expansion in the economy for the better part of Europe. So let's talk about the flash PMI numbers. And these are the Europeans' most important economic data points. Out of France, they came in with their services PMI coming in at 51.9, expected to be 56.3. So that's where everybody is talking about that they missed on that. But keep in mind, we are still seeing shutdowns come and go around the globe, and anything above 50 on a PMI, which is Purchasing Managers Index, is expansion in the economy or expectations of that expansion in the economy. It is forward looking. These purchasing managers are the ones that are seeing the demand at the corporate level and are basically putting out some forward guidance, really. All right, so that's why they're important. Now, France and Germany are the bigger manufacturing sectors of the European region. So France flash manufacturing PMI did come in slightly below 50 at 49.0, expected to be 53. They did revise last month's number up, albeit slightly, from 52 to 52.4, not making up for the miss on that headline number. German flash manufacturing PMI coming in at 53.0, expected to be 52, so slightly better there. Services PMI out of Germany coming in at 50.8, expected to be 55, and they revised last month's number down slightly on that, slightly there by 0.9%. Or 0.9 of a point. All right, the rest of the basically European region, let's call it, coming in with the flash manufacturing PMI at 51.7, expected to be 52.7, and services PMI coming in at 50.1, expected to be 54.6. So headlines, everybody talking about the European region missing on their numbers, and that was what was probably causing some overnight weakness. Well, yeah, maybe, but the fact of the matter is it's still showing expansion in the economy, albeit not as much as what was expected. All right, is kind of the way the market's reacting now heading into the U.S. session. All right, so Great Britain flash manufacturing PMI coming in at 55.3, higher than the expected 54, and flash services PMI for Great Britain coming in at 60.1. Great Britain's industrial order expectations, negative 44, expected to be negative 34, so worse than expected there. Here in the United States, we also got our flash manufacturing PMIs, but the real PMI number we look for is in the Institute for Supply Management. But we'll still talk about it. It's good to see anyway. It can't hurt, right? Came in at 53.6, expected to be 51.9, and the services PMI, we are a service sector here in the United States more so, and it came in at 54.8, expected to be 50.9, so better than expected there. Existing home sales, again, coming in nicely, 5,860,000 units, expected to be 5,400,000 units, so better than expected there. Not really a surprise. We've been talking about the housing market doing very well here in the United States with these low interest rates, people going out there refinancing and or looking for a new home. Something also on top of this new home sales, we are seeing the average home price, the highest level it's ever been. All right, now keep in mind, you will drive prices higher as interest rates go lower because people are able to spend more on the home itself rather than on the interest rate. So when you're looking at just the payment that a person makes, less money is going to the interest to the bank and more money is going to the value of the house. So people are able to, basically afford a slightly bigger house, really, or a more expensive house, really. All right, so how are we doing with the overall markets? We're seeing crude oil come off just a little bit today. It's still in the 40s, right there, building a volume node right in and around this $41. We're slightly higher than that. It lines up at about $41, we could call it $40.80. I'll call that 41 to be honest. All right, so we're 60 cents away from that, but for all intents and purposes, we are right at the point of control. Now, gold making a bit of a comeback here late in the day here on the East Coast time. We're seeing gold down by about $5.60, but still holding on to this level that we've been talking about so much, and that is where we have seen the high back in 2009. That's the 1923.70. All right, so that was a high. We did break below that slightly, but settling above that will be a coup for the bulls, or something, a feather in the cap for the bulls. They want to hold on to that level. I think it's going to hold there, and still believe that we will retest that 2000 mark probably next week or so. All right, so bonds are moving slightly higher by 10 ticks here, right back to the point of control. Nothing really to see here. We've been talking about this. This is where it's probably going to stay for the foreseeable future. And we've got the VIX unchanged for the most part, and we have the Dow Jones moving slightly higher. So we're seeing the equities pull back into positive territory here. And that's why we're starting to see some weakness over there in the VIX. So the Dow Jones up almost 100 points on the day, and probably going to relatively stay within this pretty tight range. I don't expect to see a massive move here like we've been seeing, the 1,000-point days in the Dow Jones. Maybe a couple hundred would be about the extent of it. NASDAQ up 55 points, creating a new all-time high again today, and very near the highs, as we can see here, getting ready to print newer highs on that. Now, E-mini S&Ps for the futures. Now, I know a lot of people have been watching TV and they're talking about the index making all-time highs. Well, I'm looking at the futures, and the futures haven't created that all-time high as of yet. We are just slightly away from that, as you can see, just about 10, 12 ticks away from that all-time high. I actually expect this market to go up there and test that all-time high relatively shortly. If you guys are wondering why my Fibonacci is up here at 3,500 on the 100% there, it's a little bit off. Why? It's because I was lining it up with the value areas. I probably should make a bit of an adjustment to that now that we're starting to see some shifts happening here. But you can see that they do line up with volume nodes and everything else, so those do hold true to form there. But I was being questioned about that. I like to line up the Fibonacci's with the market profile there. All right. After yesterday seeing this downshift in the point of control, we talked about that flush out there and retesting some of those old points of control today, starting to move a little bit higher. Our point of control right now is at yesterday's value area high, accepting value a little bit higher. This is where I was talking about the overnight trade with the flash economic data points, the flash PMIs coming out of Europe, basically starting here at midnight and going till about 1. You can see that really threw the wet blanket on the market as we were seeing the European market start to sell off. Now, China actually did pretty good on their overnight, but then once these data points started coming out, they were really touting them as being not very good. Now, they're all expansion for the most part, other than the flash manufacturing PMI out of France was the only one coming in below, showing slight contraction there. But our market coming into today, celebrating the existing home sales and probably a little bit due to the flash PMIs that we got, getting us to rally back up to near highs of the day here as we're talking. Now, yesterday, we were talking about Uber and Lyft and everything else. Well, gold, I did talk about gold in my webinar and talking about selling puts in there. I haven't added to that position at this point in time. I want to keep an eye on it. It did come down and test that 180 handle, as you can see earlier this morning when the futures broke below that 1923 area that I've talked about as being a very important location. I'm going to keep my eyes on this. I'm not going to add to this position until I see a confirmation of a move back to the upside in GLD. Just wanted to talk about that because I know a lot of you guys were watching that webinar yesterday, and I'm usually implementing the strategy around the underlying I talked about in the webinar. Well, today, I've already added that last week, if you guys remember, so I'm not going to add to that position today. Uber. Oh, you guys, California did not shut these guys down last night at midnight. As a matter of fact, they got a reprieve and are going to allow them to continue to operate until they figure this whole thing out. Well, that was celebrated by Uber. So I shaved half of my position in this trade. If you guys remember, I was selling the options that expire today, selling the calls in Uber very aggressively. Sold the August 29 calls in there and covered half of that position today. It's not looking very good, to be honest. I'm looking probably to be getting short Uber because I'm not going to cover these. I still am bearish in Uber based on all of the headwinds that they are going to have with coronavirus and everything else. But I did want to pare back some of my position and covered those that I had sold at 49 at 81. So I did trim back some of that position. I want to make sure that I'm not misquoting myself on that Uber trade that I sold at 43. Sold them at 43, bought them back at 81 on half of that position, but still half a tranche left in my position that I'll probably take into the weekend and become short because it's going to be put to me. If I'm in the money on those short puts, it's going to be put to me, so I will be short that underlying. Now, I'm going to start talking about next week how we start lowering our overall cost basis on it because my break even on this trade is now right around 29 because remember, I lost on half of that trade, right? Normally, I would say if I sold those calls at 29 or the 29 calls for 41 cents, my break even would be slightly lower than that. Or slightly higher, I should say, at 29.41. Well, because I basically lost 40 cents on that half that tranche, it kind of negates that trade, right? So my break even on this is 29, and then next week we will start to look at lowering cost basis on this trade and stay diligent with it because I think we're going to see a little bit of a correction. It's kind of they bought the news and I'm going to wait for that to kind of shake out and come back a little bit, try and get out for a scratch anyway. All right, so that's what I'm doing today, keeping an eye on that stuff. That's all I've got other than go to Pro Trader Strategies, check out on how we sell short puts. Now, in that webinar, I'm not talking about how we sell calls the way that I did in this particular trade, which was more of a gamma trade. I do have webinars on that you can check out as well. But please take a moment to go over this disclaimer. We are an educational company. I'm not trying to solicit you guys to do the trades that I'm doing. I'm just talking about how we trade options here at Pro Trader Strategies. We've created guidelines. We've created a roadmap for you guys to follow. You can implement these strategies to help you increase your probabilities of success in your trading. All right, and that's all I got other than have a great weekend. And if you can't take that, take it easy.